Folks are here for Nvidia
Oh,
another
wow.
monster quarter. Nvidia tops estimates and says sales will jump 170% this quarter,
Yep.
driven by demand for AI chips, which I think is incredible. Nvidia's performance was driven by its data centers, it says. Or is this right? Which includes the A100 and H100 AI chips that are needed to build and run artificial intelligence applications like
These
ChatGPT.
stock analysts are geniuses.
I know, they're really smart. Good question. Is an H100 the newer version of the A100, or
Yep.
which one's more powerful? The H100?
The H100 is more powerful, and there's an H200 coming out.
Okay. And are we talking like orders of magnitude? Is it like a 1x, 2x, 3x, or is it just if you're an AI person, you want your stuff on H100?
That's a good question. There's sort of two problems. There's the total compute that you can get out of a board, and that's assuming you really make use of it properly. You're getting all those cores running in parallel. And then there's also the interconnect, how fast the cores can trade data or send data from one board to another board, because typically they're working in a rack and you have many boards. And if you're running a big transformer, it won't fit in the memory of one GPU card. So you need many. And as you're going through the layers of the transformer, you're probably exchanging chunks of matrices between the different boards, right? So you need a really fast interconnect between them. So I think the most recent ones, if I'm not mistaken, the biggest improvements are actually in the interconnect, not in the GPUs. But they keep stacking more and more GPU cores on each board. And also they're specializing some of the hardware to just do big matrix multiplies, because that's what transformer models really want. That's what most deep learning models want.
Interesting. And that also ties to why they're building their own software, also building their own models, because they want to see what problems people have when they're using their hardware. Originally, I scratched my head on that and you told me about that. I was like, oh, that's pretty interesting. But then I never thought about the concept of there's a compute problem, but then there's a networking problem of having a transformer so big it's over so many GPUs that just its sharing data with itself can be a huge performance loss. So then Nvidia reported a $10.3 billion in data revenue, which was up 171% year over year. My God, I don't even know. Like, what do you say about those numbers? That's incredible.
Remember also, these stock analysts love to compare things year over year or quarter over quarter or same quarter previous year. So what you're looking at is everything was horrible 2-3 years ago, and now it's recovering. So the comparisons or comps are easy to match, right? If you had a horrible quarter a year ago, then you have a pretty easy shot to do better this year.
That's a really good point. It's like
They're still ramping up from the slow times. The other thing that's interesting here is gaming went up a little bit. I think it was like an extra 1.5 billion, but data center basically doubled. So gaming is healthy, but it's still not booming. For all we know, a year from now, for whatever reason, their gaming just goes bananas. Maybe people decide the metaverse is cool or something. I don't know. And so they could see a boom in another market. Likewise, another market people were waiting for is automotive, because everyone's expecting self-driving cars to need GPUs in them, or robotics. And those did not go up at all. I think it was like 200 million. It was something much smaller for automotive. So those markets haven't really taken off yet.
exactly. So maybe it's a future bet. Like automotive still taking time. You have the regulatory environment. You still have the risk of, are these cars safe for everyone to use at all times? Interesting point about gaming, because like we've been hearing about, we think there's going to be a discretionary spending slowdown. But then we saw Diablo 4 come out, which has been a blockbuster. Baldur's Gate 3 has been doing pretty well. So that's been very great for Nvidia. But it'll be interesting to see what happens going forward, if there's going to be more blockbuster games coming out that's going to allow them to continue to make money there. But it's nice to see they're diversified, at least in just these different sectors. Back in the day, it was pretty much gaming. Like when I got my first GeForce 4 card back in the 90s, that's a fossil. I am. Nvidia's only known for gaming, but now they have gaming and also the AI space. Maybe self-driving cars will kick in.
Don't forget crypto.
And crypto, right? Yeah, exactly. And beautiful point about they came out of the trough of crypto because they overproduced, because they thought there was going to be more demand, and crypto crashed. And then, yes, if you compare it year over year from that trough to where they are now, it looks glorious.
The other obligatory thing to say here is, if you're doing traditional stock analysis, you'd look at NVIDIA and you'd say, what's the PE ratio? And I think before today, the PE ratio was something like 250, which is utterly insane, right? Like it's 10 times what you'd expect a mature company to be at. So that shows, I guess the positive spin is that shows a lot of optimism for their future, that revenues could grow 10 times from here. That's pretty surprising. And that's what would have to happen for that ratio to come into line.
And that's a really good point, because for investors, like you look at that PE ratio, it shows, does Wall Street think there's going to be much more revenue growth and much more earnings, and they're willing to pay in advance for that? And so people might say, yeah, I'm okay with that. Like, I think like some of these FANG companies, they probably had horrendous PE ratios back in the 2000s or whatnot, or 2008, 2009, but then eventually their earnings grew, and now their PE ratios make much more sense.
Exactly.
And now for someone who's investing in Nvidia, do they think it's going to go higher from here? So does PE ratios really make sense? So they should double down? Or do people think maybe we've gotten the best out of this round, maybe it's time to let the earnings grow first before we jump more into there?
I think the ARK Invest people, Kathy Wood's fund, they dumped a huge amount of Nvidia this quarter, right? So I guess their read was either it's going to top out and go down, or it's just too risky, and we'd rather move the money somewhere else that has better prospects, right? Because they're not going to just sit on the sidelines. They're going to invest in something. And I think they wanted to move into Tesla and something else. Anyway, they dumped. So that would have been putting pressure on the stock for the last couple of weeks. The other thing is Nvidia, I think, approved another $25 billion in buybacks. I'm like, I hope, I didn't read carefully, but I hope they're not buying it back anytime soon. If I was them, I would just ignore the buyback fund until their stock goes way down again.
Buyback timing is so terrible, because I always see companies, they do the buyback at the peak of their valuation. And then they're just like, oh yeah, I just incinerated all that cash.